Hi, I'm Bill Walker. I asked my guest, Jeff Hyrich, lead portfolio manager on Trimark Global Endeavour Fund, to describe his investing vision for me. He summed it up in 3 words: opportunistic, concentrated, and eclectic. Jeff is here with me today to elaborate on this and his interesting take on why he thinks it's a key factor for achieving lasting investment success. Thank you, Jeff, for being here.
Thank you for having me.
I think it's fair to say that Trimark Global Endeavour Fund is pretty unique within the global equity space. But what would you say makes Trimark Global Endeavour different than other global equity funds that are out there?
What makes Global Endeavour different is that we own much smaller size companies than most global equity funds in Canada, which are fairly concentrated in large cap companies. So our average market cap is approximately $7 billion, and that compares to approximately $40 billion for the 10 largest global equity funds in Canada. So if you think about it, their companies on average are 7 times bigger. And since they're so big, they will have slower growth prospects. It's just the law of large numbers. If you were just to use an analogy, let's just take a cat that weighs 7 pounds and compare that to a cat that weighs 30 pounds. Again, 4 or 5 times bigger. And I just say, which one do you think is going to be faster, they'll be able to catch the mouse? It's going to be the smaller cat, which will be faster and more agile and nimble. And that's the same with smaller sized companies.
And also, I just wanted to follow up on that by asking you that, being highly concentrated in only 25 stocks, what's your response to those who say that you have a concentration risk?
What we've done is we make sure that every idea is individual, and so we diversify across different industries, across different geographies, and across different investment opportunities. So it's not like we own 2 or 3 of the same kind of investment. And so, for example, in Global Endeavour, we own companies that are based in South Korea, South Africa, Ireland, other parts of Europe, the United States, Canada, Mexico, and these companies do business all around the world. And what I think about when you own 25 ideas, is it really allows you to do in-depth analysis and research so you can really know your businesses very well. And compare that to most mutual funds, which would probably own 100 companies or more. And I'd argue that you really are not understanding what businesses you're owning, because you own so many, it's hard to follow them. And at the end of the day, if you are right, well, if something's only a 1% weight in your fund and it doubles, then you only make 1%. It goes from 1 to 2. Versus in Global Endeavour, if we have a decent size weight in something and we're right, it can add materially more returns to the fund.
Thank you.
Thank you.